So you want to invest in the stock market. Look, I know it can feel complicated, I know it can feel risky or even overwhelming at first, but don't worry, you're not alone. When I first started, I thought investing was only for rich people, only for day traders, or Wall Street pros. But the truth is, the stock market is one of the easiest ways to build wealth over time, even if you're starting with a small amount of money. So today I'm going to break it all down in the simplest way possible, as if I were trying to learn again what the stock market is, how it works, what you can invest in, and how beginners can get started safely. So let's keep it simple. And something I want to say before this video starts, I really appreciate the support on my last videos. We're almost at 2,000 subscribers, and check the link in the description below. I just started a Discord, so if you guys want to join and be around like-minded people and start this little community with me, feel free to join. Think of the stock market as a giant marketplace where people buy and sell ownership pieces of a company. Those pieces are called stocks. When you own a stock, you own a tiny fraction of that company. If the company grows and makes more money, your piece becomes more valuable. If it struggles, your piece loses value. The stock market is basically a giant scoreboard. It shows how much people think a company is worth right now. Now, it's important to understand, in the short term, prices go up and prices go down. Short term gets affected by emotions, gets affected by news, and certain trends that might be going on. But in the long term, the stock market tends to grow because businesses grow, businesses innovate, come out with new technology, and they make profits. That's why long-term investing usually works, because what we do with long-term investing is we ride out the overall growth of the economy. Now, you might think to yourself, okay, that's cool, but why would I put my money into the stock market? Well, the harsh truth is saving money alone is not going to make you wealthy. This is something that I struggled with when I was younger. I thought by just saving every penny that I make, I'll be wealthy one day in my life. But the truth is, there's this word that we've all heard of called inflation. And inflation eats away at your cash. But the stock market, historically, averages an annual return. And that annual return is usually around 7 to 10% of growth. So for example, if you put $100 into a savings account, it's not going to really grow. But if you put $100 into a broad stock market index and let it grow for 20 years, it could become $400 to $500. Now, it doesn't sound like a lot, but that's only putting $100 in. So imagine if we put 1,000 or 10,000 or 100,000. Investing lets your money work for you instead of just sitting there. And the earlier you start, the more time compounding has to work its magic. Cool, so we know what the stock market is. We know why you want to invest your money, but what can you actually invest in? So this is the part that a lot of people get excited over, but there's a few things and a few limitations that I would put on yourself. There's a lot of ways to invest in the stock market, but let's keep it really simple. I would say there's three main categories. There's probably 20 categories, but the three main categories as a beginner that I would like to know about are individual stocks. So this would be owning a single company like Apple or Google or even Tesla. The pros of owning individual stocks is you can hit really big wins. The cons, though, is that it's risky because if the company fails, you're going to lose your money. Next is going to be ETFs. These are exchange traded funds. This is going to basically be a basket of companies. So for example, you might have VOO, which is VOO, or SPY. That's going to track the S&P 500, which is the top 500 companies in America. The pros of this, you get instant diversification, you get lower risk, and it's easy to understand and grow your money for a beginner. Next is going to be mutual funds or index funds. This is going to be similar to ETFs, but not traded all day. The pros of this is these are great for long-term retirement accounts. This is what you typically see in your 401k if you have a 401k. For most beginners, ETFs or index funds are the easiest way to start investing your money. Instead of betting on one company, you're betting on hundreds of companies at once. So how do we actually start investing? Well, it's pretty easy. First, we're going to pick a brokerage account with whatever company we want. I use Fidelity. Some people use Vanguard. My dad uses Charles Schwab. Some people use Robinhood or Webull. You pick the one that you like the look of. Step 2 is we're going to decide what account type that we want to open. If you're in the US, a Roth IRA is a great retirement account because your money is going to grow tax-free. A brokerage account is nice, it's flexible, and it can be used at any time. Step 3 is we're going to start small. We're not going to wait for the perfect time. All we're going to do is we're going to invest a little bit of money consistently. So for example, this could be $50 to $100 every week or month into the S&P 500 ETF like VU. And step 4, we're going to embrace our long-term mindset. Don't panic if the stock market dips. That's normal. In fact, dips equal discounts. So you want to see those dips here and there because once again, you're going to be investing for the long term. Now, this sounds all nice and dandy, but let's be honest, there's a lot of common mistakes that beginners make, and I was one of them. So let's talk about what not to do. What I would recommend not doing first is trying to time the market. No one can perfectly predict the highs and the lows of a certain stock. All you want to do is just get your money working for you and invest consistently. Next is going all in on a hype stock or a cryptocurrency. High risk equals high stress, high anxiety, and it's going to be something you're constantly worrying about, and we don't want to worry about our money, and we don't want to stress or add anxiety to our already busy life. Next is going to be checking your portfolio every day. This is something that I still do. You'll drive yourself crazy. You're going to look at it every day. You're going to see numbers go up. You're going to see numbers going to go down, and then you're going to start coming up with all these solutions to fix the red. In reality, your portfolio is going to go up and down. The best thing to do is just to set it and forget it. And then last one is not diversifying. If you only own one stock, you're gambling. You're not investing. Now, granted, if you only own like Google, that might be good for you because you believe in the long-term outlook of Google, but it's always good to invest your money into different stocks or different ETFs. That way you're completely diversified. And remember, when we're investing in the stock market, we're not here for a quick flip. We're here to build financial wealth over years and years, not just days. Now, our last step is going to be keep it simple. Here's the easiest beginner plan. I'll walk you guys through the framework of an easy beginner setup. We're going to open a Roth IRA. We're going to buy a low-cost index fund like an ETF like VU or SPY. We're going to set every single month an automatic investment amount. We're not going to panic when the market drops, and we're going to let compounding do the work, and we're never going to look at it again. And that's it. You don't need to be a day trader. You don't need to memorize stock charts or listen to earning calls. All you need is just time and consistency. So if you're just starting out, keep it simple, learn as you go, start small, stay consistent, and play the long-term game. If this helped, drop a like, subscribe for more beginner-friendly investing videos, and comment down below. Are you already investing or are you just getting started? And remember, the best time to start investing was yesterday. The next best time to start investing is today. Thank you guys for the support on these videos. I hope to reach 2,000 subscribers soon, and I'll see you guys in the next one.